What's going on, everyone? So let's go into this stock I'm looking at right now. So right now I'm trying to add some dividend stocks to my portfolio just so I can have a more diverse portfolio. I'm trying to look at some REITs. So next few videos going to be about some REITs and should I add them or should I add them. Now I do have a few requirements for my stocks portfolio or my dividend portfolio. One, it has to be a good growth stock. Two, it has to be financially stable. And three, it has to pay a dividend. So let's get into this video. And today we're going to be talking about Broadstone Net Lease. So Broadstone Net Lease, if you don't know who they are, they're a industry-focused, diverse REITs that invest in primary single-tenant commercial real estate property and are net lease on long-term basis on a diverse group of tenants since the company was formation in 2007. And right now they have about 758 properties within the location of 44 U.S. states. So they have pretty good diverse in commercial real estate. Now, this is a REIT, so you do get taxed differently. You do get, and you do run into issues. I'll put up on the screen some of the tax implications, but you do need to know some of these rules and regulations whenever you get into REIT, because the dividend paying stock, you do get taxed on them. Now let's get into the stock itself and let's look at what they do. So they pay a 7.27% dividend yield, a really high dividend yield. So that's a good thing if you're looking for a dividend paying stock. Now let's look at the year to date. Year to date is 0.63%. So if I add that 7.27% to it, it's about a 8% growth a year. And then if I go year to date, if I go for a year, it'll give me 7.27 plus 1.85%. It'll give me about 9% growth. So it gives me a 9% growth a year if you add your dividend yield plus your 1 year. Now let's look at the 3 years. Now here comes the problem. It is dropping overall 3 years, so the stock is declining. So you get 7.27%, but it's declining 27.22% over the past 3 years. So it's not a good growth. It does pay a good dividend. It does look good for like the 1 year and the year to date. So maybe it's a turnaround point for them. And if we can catch this early enough, guess what? You're going to have really good growth. So we have to look at the finance and look at it a little bit deeper and see if there are any insider trader. Now the 3 years, like I said, it was decline. 5 years, you know what? The 5 years does not look that bad. 5 years is 4.72 in the negative. So, you know what? If it kept at 7% every year, it might even out. But you don't know. I haven't done the math. It's just an estimation. So let's look at the finance. Well, in 2024 they didn't report nothing yet, but in 2023, let's see, other income expense. This is concerning. Okay, they have 0 in 2023. This doesn't seem right here. That doesn't look too good for me. But if it keeps the same as 2024, 2023, dilution average shares 196. So they had an uptake of dilution of average share. I don't like that. Just because it looks like they're selling the shares. And then they have a good growth margin of 87%. So, and Now, the operation expense and the operation income, 42, 43. So they stay about the 30 percentile in the last few years in the net profit. So that makes sense how they can pay out the dividends. So financially, they're doing good. They have very good financial standing. It's just in 2024 they didn't really report anything, so I'm not sure about it. Let's see what the analyst says about it. I don't see anything interesting on that. Where did so let's see. I don't see anyone really selling it besides they're buying it. So it looks like they're buying the stock. So it's a good thing. It'll help it increase. Besides Molly and where's Molly? And that's the senior vice president of human resource and administration. So Molly's the only one that sold at price. So she made 97,048K or 84K. Now Wally, everyone else looks like they got some stocks and they didn't dilute it out. They didn't sell their stock, so that's not bad. Now let's see what AI says about it. Evaluation is 2 out of 6. Earnings 4 out of 6. I agree with the earnings. The earnings really good. The growth potential 1 out of 6. I agree. They don't have really a growth on this. Performance is 2 out of 6, which I agree because they have not been doing that good. And the health is 0 out of 6. Yeah, I agree because it hasn't really made a turnaround yet. It looks like it is a possible. If I look at the 1 year chart, that it is gonna be going back on an upward trend. So it is a good possibility that you get a good growth in the next year or two from this stock. So if you keep looking at it and look at the projection, it looks like in the next year or two, you will get a good return. So the bigger question is, should I get into this stock? The analyst says it's a buy. Um, what is my prediction about it? Well, right now I'm gonna tell you this stock is too risky for me. Um, it does have good potential, and I do see it increasing its valuation. It's just that in the next couple years, due to the economy and the commercial side, I don't think it's gonna be worth me getting into. Now, who should buy this stock? Now, if you are one of those risky investors that are interested in a possible good growth of 16, 17% a year with a 7% dividend, I think this is a good possibility that this grows, 8%, 9% a year in the next few years, just because it has a strong probability based off the analysts, and it pays a really good dividend yield. So if you're more of a riskier investor and want to hold it for a year or two and just monitor it year over year, see how well they do, this would be a good stock to have. Now, if you're going to be, now, the reason why I say this is because the 1 year and year to date is in the positive with a 7.27% dividend yield. So it is going up as of right now. And if you do hold on to this, it looks like you'll have some good growth. Now, the only issue is whenever you get to the 3 year mark and it dropped dramatically, 27%. But if you take the account that in the 5 years it was 4.72, it might be on an upward trend and you might be able to catch it to go back to $25, $24 a stock. So then that's a $10 gain. That's a really good increase. But this is a really risky one. And I only tell people who's willing to risk this amount of money or low amount of money on this that yes, you can invest in this. It does have a good growth potential, but it's a really, really risky growth potential. And then who should not invest in this? Anyone who's looking for a long-term investment or in retirement should not invest in this stock. Just because you are risking your livelihood on this, and you probably need a set um you probably need a set amount of money to live. And this is more for, hey, if you're willing to swing trade by looking year to year on this, this will be a great one to have. But if you're trying to use this for a long-term investment, it is not a good stock to have. So for my stake, I will not add this to my dividend portfolio. And here's my reason why I won't add it to mine. Number one, even though I see a good potential of a recovery and growth, it's just too risky for me. And secondly, I am thinking about commercial real estate overall, and I know the commercial real estate has a big issue with loans and debts right now, and I don't want to be caught up in that, especially in commercial real estate. And people made articles about how all these interest rates are about to be called, and since this is in an interest rate in a commercial site, I just don't see it. It might actually drop more, but I will pay attention to it because it does look like it's making money. But they might take a hit, and I might be able to get it for cheaper. So it's one of the stocks I'll keep paying attention to. Maybe by the end of next year, um, I'll purchase some, but right now I just don't do it. Just because it has a high dividend yield does not mean it's worth the risk for me. And this one, remember, this is a strong investment for the analyst. So that's all I got for you. I won't buy this stock just for those reasons, and it does give a 7.27% dividend yield. Thanks for watching. Like, subscribe to the video.